So, introduction to Forex trading. Welcome to this tutorial of Forex trading, and I'm going to be explaining to you what Forex trading is all about. So, this is a beginner's class for novices that don't even have an idea of what the Forex trading is all about. So, we're going to be learning what the Forex trading is all about and some of the Forex terminologies we use in Forex trading. So, dive in and let's go. So now, what is Forex trading? What is Forex trading? Now you're starting Forex trading or you've been hearing about Forex trading, Forex trading, Forex trading. So what exactly is this Forex trading? Now, according to Hartley Withers, Forex trading is a foreign exchange. It is the art and science of international monetary exchange. The Forex market is the world's largest financial market, bigger than banks, and over $4 trillion worth of currency are traded each day. The amount of money traded in a week is bigger than the entire annual GDP of United States. And the main currency we use in forex trading is the US dollar. So this is just the basic definition of what the forex trading is all about. The simple way of explaining this is just that the forex trading is just an exchange of currency, an exchange of currency, and we have the base currency, which is what the US dollar. Now, who are forex brokers? Who are forex brokers? A forex broker is a financial institution or individual that acts as an intermediary between a trader and the foreign exchange market, which is also known as the forex market. Their primary role is to facilitate trade in the forex market by executing buy and sell order on behalf of the client. So what this simply means that these brokers stand on your behalf. They represent you in the foreign exchange markets. So you can't just take your money and go to the market without the help of a broker. So the broker are there for you. Now, the examples of these brokers. What are the examples of these brokers? As you can see on the screen right now, we have the HFM markets, we have the NX markets, we have the FSTM markets, we have the REIT markets, we have FS Pro markets, IC markets, and Opta. Now we have a lot of forex brokers today. So I just pick up some of them and display them for you on the screen. So a lot of them, and on the screen now I have used 3 of these market brokers very well. So I'm going to walk you through some of them. Now, what are the forex terminologies? What are these forex terminologies before we move on to the main class where I'll be explaining? So I want you to take your pen and write out these forex terminologies now because I'm going to be mentioning them as time goes on. So 2 types of trade we have in the forex market. We have the buy and we have the sell. These are the 2 types of trade you have in the forex market. The buy is represented with green, as you can see on the screen here, and we have the buy is known as the what now? The bull, or you call them what? Bullish. So whenever you see the market going in an uptrend, for what you can see on the screen here, whenever you see the market going in an uptrend, so that is why this arrow is facing up. We are in the bullish trend. So I can come up and tell you that we are in the bullish trend. We're in a bullish trend. We're in a bullish trend. So what I simply means that the market is what? Moving upward. Now we have the sell trend, which is known as the what now? The bearish. Now the sell trend is donate with what now? With the red candle, which means that what the market is in what? Is in down trend. The market is in down trend. As you can see right here now, the arrow is pushing downward. So this is the bear trend. The market is what you have the bear trend, and that is what about what we call sell. Now, PIP. What is PIP? The PIP is the smallest increment of price movement a currency can make. Also points, it is also known as what now? Point of points. For example, one PIP for Euro USD dollar is what? Is 0.001. So when this 0.001, sorry, when this 0.001 move to the next um point, which is going to be what now? 0.002. That is what now? 2 pip, 3 pip, 4 pip, so on and so forth, like that. Now, what is the bid and the ask price? What is the bid and the ask price? The bid price is the price at which the market or your broker will buy a specific currency here from you. Okay? Thus, at the end of the bid price, a trader can sell the base currency to their broker. Also, what's the ask price? The ask price is the price at which the market or your broker will sell a specific currency for you. At the ask price, you can buy the base currency from your order, from a broker. Now, let me use this diagram on the screen to explain this to you now. This is the bid price, and this is the what now? The ask price. Now, the difference between these two prices is known as what now? The spread. Okay? The difference between the bid price and the ask price is known as what now? The spread. So don't forget. Now, let's take a look at this now. How do we get the spread here now? This 42 here on the screen was minus from this 40, or this 40 was minus from this 42 on the screen here now. And that's where we have what now? These two here now. So this pip here, pipet up here, the 8, the 7 was minus from the 8, and that's why we have one here. So the difference between these two is known as what now? Pip, which is called what now? The spread. I'm going to explain that more better here now. Now, let's take a look at this now. This is the bid price, the price at which the buyer is willing to pay. And the difference between these two prices is known as what now? The spread. The ask, the price at which the seller is willing to what now? To sell. Okay? Now, the ask price, and this is what you see mostly at your screen on your Forex market. You always see this like this. The red line is going to be up, and the green line is going to be down this way. Whenever you use your Forex application for trading. Now, leverage. What is leverage? Leverage is the ability to gear up the account to a position greater than your total margin, account margin. For instance, now if a trader has 1,000 of margin in his account, it opened about 100,000 positions. The leverage his account by 100 times or 100 ratio 1. If you have 200,000 positions with $1,000 account of margin, his leverage is 200 times of what now? 1. So leverage is just like your broker giving you more chances in the market to take more trade. More chances in the market for you to take more trade. Alright, stop loss. Yes. The stop loss is known as the what now? The L, the SL, the SL. Now a stop loss is an order just from the word stop loss. A stop loss is an order that is placed with a forex broker to sell a currency pair once it reaches, to stop a currency pair once it reaches a certain level, a price level. So this simply means that you use a stop loss to limit the amount of loss a trader is willing to tolerate on a particular trade. So right now you have the capital and you're taking a trade. So the stop loss help you to stop your loss. That is the amount of money you as a trader is willing to what now to lose on a particular trade. Now, just like the way we have the stop loss, we also have the what now to take profits. Okay. So now, what is take profit? The take profit is just an opposite of what the stop loss is. A take profit is an order you give your forex broker to close a position and take profit once price reaches a predetermined level. So, like I told you earlier, that is the take profit known as the TP is just an example of the stop loss. Now, the take profit also allows traders to lock in profit automatically by choosing your trade when the market moves in their direction. Now, it simply means that there's a point in time when you take a trade, and once you take this trade, it gets to a point whereby you start making some profit. So what the broker does is that it automatically takes your profit for you. But you are the one that is going to set your what now? Your take profit and your what now? Your stop loss. Now, what is lot size? Yes, this is actually the area you need to focus more attention on. What is lot size? A lot size in forex trading is a standard unit of measurement used to describe the volume or size of a particular trade. A lot represents the amount of currency bought or sold in a trade. When I was learning about forex trading, I had a lot of issues about the lot size and every other thing like that. But I'm going to break it down for you guys on the screen right now. So now let me see if I can pop out the calculators on the screen so that I can explain this one better. Okay, I have my calculator on the screen right now. So let me use this as an example now. A lot size is just like an amount you want to invest in a trading. You want to take in a trading. Now we have different sizes. We have different sizes of lot sizes here. Let me explain this now. We have the unit, the volume, and the peak. Okay. So remember that the market moves in peak, just like the way I explained to you. Peak 1, peak 2, peak 3, peak 4, peak 5, peak 6. So when the market moves in 10 pips, you have 10 pips. When the market moves in 20 pips, you have 20 pips. Now, these lot sizes are of different sizes. Sorry about that. These lot sizes are of different sizes. Now, we have the standard lot, we have the mini lot, we have the micro lot, and we have the nano lot. Now, watch this now. If you enter a trade using I'm going to start with the nano lot. If you enter a trade using the nano lot, which is what? 0.001. As long as this 0 is in 20, that's a nano lot, okay? It could be 0.01, 0.09. This is still a what now? A nano lot, because you have 20 here now. Now, if the market moves in 10 pips, if the market moves in 10 pips, what is your profit of that movement of the market in that 10 pips? So 0.009 multiplied by the 10 times the market moves. That's it moves maybe in a bullish trend in 10 times. That's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Now times 10, you've just made a profit of what? 0.09. 0.09. Alright. Now let's go to the other one, the micro lot. Now if you take a trade using the micro lot, that's 0.01, and the market moves in 10 pip. In 10 pip. As you can see down here, over here, you just made a what now? 0.10 dollar per pip. Okay? $0.10 per pip. Now the same thing happen here. If the market, if you take a mini lot, 0.10, you make what? It's what? 1 pip $1 per pip. $1 per pip. So it means that when the market moves like one pip, you make $1. It moves 2 pip, you make $2. It moves 3 pip, you make $3. It moves 4 pip, you make $4. The same thing also happens if the market move in the opposite direction of what you are expecting. Then if you move downward, maybe you take a buy now and it moves downward, just a single pip, you lose $1. It goes down again, you lose $2. It goes down again, you lose $3. So that is how it works. Now, if you now take a trade using the standard lot, which is just one, the market moves in 1 pip, you made what now? $10. So if the market moves 10 times, you made $100. If it moves more than 10 times, the number of times the market moves in pips, you made each of these dollar that way. So this is how the lot size is, or the lot size works. Okay, so now the trading hour, the forex market is open 24 hours a day. Right now I'm even trading 5 hours a week with the most important trading center being located in London, New York, Tokyo, and Sydney. Now, sometimes as a forex trader, I got to understand that if you don't trade every time, you don't trade every time, there are specific time and the specific days and the specific hours you trade. Okay, so we're going to be discussing that in the next videos. So what are the applications we use in trading forex? We have the MetaTrader 4 and we have the MetaTrader 5. So we're going to be looking at these two applications, setting them up, and so that is the end of so what are the applications we use in trading forex? We have the MetaTrader 4 and we have the MetaTrader 5. Now, there's no much difference between these two applications. It just depends on the broker and the kind of account you're using to use for your trading. So we can use the MetaTrader 4 and you can use the MetaTrader 5. So I'm going to be explaining this to you in the next video. So this is the basic things we need to know when it comes to trading forex. So now I believe that right now, if you novice to trading forex trading, with this little explanation I've just given you on the screen now, you should be able to understand what the forex trading is all about. So I'm just going to take a recap back of what I've done so far. I told you this is the trading hours. So the trading hours, you don't trade every time in forex markets. Okay, you have to look at where the market is moving in a range period. Okay, in a range period, this is the time you take your trade. Okay, so that you can make more profit. I explain what the lot size is all about. Now the lot size is just like when you have, okay, you are being called to come and take an investment now. Then we have someone that's that contributed 10, just one, and we have been told that for every movement of this investment, whatever what we lay down, whatever what we put down on this investment is what we are going to receive. And also the same thing other way around, we are going to lose. So someone came and dropped 10, someone came and dropped 100, someone came and dropped 1,000. So for if there's a movement in the market, the 1,000 gets 2,000. Okay, the one of 100 gets 200, then the one that dropped 10 gets what? 20. So it works that way. So when the market moves 3 times, that's 3 pips. The one of 1,000 gets 3,000. The one of 100 gets what now? 300. And the one of 10 gets what now? 30. Okay, so you can see that it is based on their lot size, they get their profit. And also the same thing happens in terms of losses. All right, I explain what a take profit is all about. A take profit is just like when you take a trade analysis, you look at the market direction, the trending direction of the market, then you take your trade at that particular moment, and you expect the market to get a particular level, and the market reaches that level, then you take your profit. You've set your profit, you take profit at that particular point. So when the market gets to that point, it automatically take your profit. Now your profit will definitely be taken, even though if your phone or the devices you are using to take a trade is not connected to the internet at that particular point, it will definitely take your profit as long as you set the take profit. So the same thing also happened to stop loss too. Okay, so the same thing happened to stop loss, just like the way we have our own now, our take profit. Okay, the leverage, I already told you what the leverage is all about. And leverage is just to give you more position, in the market to take more trades. Now, the difference between the ask price and the bid price is the spread. The difference between the ask price and the bid price is the spread. And what is the ask price? The ask price is the price at which the seller is willing to sell the currency at that particular moment. So now the seller is willing to sell the currency at that particular moment for 100 and what now? $1. Why the bid price is willing to what now? So the buyer is willing to buy at the currency at what now? $100. All right, I've just explained that, and I told you that the difference between these two is what now? Is the spread. A pip is the movement of the market. So the market moves in pip, either in bullish trend or in bearish trend. And the two type of trade we can take in our forex market, the type of trade we can take in our forex market is the buy and the sell. Don't forget that the buy, which is known as the bullish, is an uptrend market. It moves up. While the bear is what now? A downtrend market. It moves down. Okay, so these are the terminologies you need to understand in forex market. Now, the brokers allows you to trade forex. Now, without this broker, it's impossible for us to trade the forex because fine, we are going to what now? Get our capital from them. And when we get our capital from them, we automatically know what now? Start trading. They give us the access to go into the big market, the financial market, and we can what now? Take our trade. I just explained an example of forex trader and who a forex broker is all about. The primary way is to facilitate trade in the forex market by executing a buy and sell order on behalf of their clients. So I told you what the forex market is all about. And over $4 trillion worth of currency are traded not in a week, but just in a what now? In a day. And the amount of money that is traded in a week is bigger than the entire GDP of United States. So this is where we're going to end up the class for today. If you have any questions relating, you can definitely reach us by the mail or through our WhatsApp. Thank you.